Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we will enter the bank reconciliation for the second month of operations within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. We are in the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be doing a bank reconciliation. We've done a bank reconciliation in the past, but for the first month of operations, this will be the bank reconciliation for the second month of operations. Because this is the second month, it should go a little bit faster. The first month of operations typically has a little bit more problems because we have to put that beginning balance in place. The second month of operations, however, is a good demonstration of the fact that we're going to have outstanding items from the prior month that we're then going to have to deal with this month, meaning we had those outstanding items that were the reconciliation items for the month of January. We're now going to reconcile the month of February, and it's important to note that there's that bit of crossover as we reconcile. So let's go through what we're going to do once again, and then we'll get into the bank reconciliation. So first we're going to go to the reports on the left side and take a look at our bank balance. So we're going to reports. We're going to go to the balance sheet, and we're going to check out the balance sheet as of the end of the second month, which will be February. So 02/28/21 to 02/28/21, just the day of February 28th, 2021 to the day of February 28th, 2021. Just that one day, we're going to run that report. That's the date that we are going to reconcile as of. That's the date of the bank statement we will be considering, and as of that date, February 28th, 2021, we have a checking account balance in our book balance of $99,115.56. We're going to compare that to the bank balance, and you would think if we did everything correctly that that balance would be exactly what's on the bank balance. If we look at the bank statement, then we see that the ending balance for February, and it should be February 28th. So we've made that adjustment, so it's going to be the end of the month February. Now it's not the same here, and that's not necessarily meaning that there is a problem. It doesn't necessarily mean we made an error. It could be that there are items in our system, and there will be, that we wrote checks and had deposits as of the end of the month or towards the end of the month that have not yet cleared the bank statement. Those are the reconciling items. We're going to go through this a bit faster this time since it's the second one here, but note the goals here. One, note that the bank reconciliation is a huge second internal control only to the double entry accounting system itself in allowing us or helping us to prevent making errors. So it's really important to do the bank reconciliation if you really want to have confidence on the numbers we are having. We are going to reconcile from the bank statement to the books. So we're going to see if something is on the bank statement, not on our books. Typically, we have to fix our books. We will typically go in and make the adjustment. If something is on our books and not here on the bank statement, typically, hopefully, that's going to be just an outstanding item that we can then just use as part of our bank reconciliation. We won't have to take any action. We won't have to enter a journal entry. We will just have to recognize that that's going to be a reconciling item, typically an outstanding check or an outstanding deposit. So to do this, I'm going to minimize this, and we're going to get back over here. This is the book balance. We're going to now go to the bank reconciliation process. To do that, we're going to select this cog up top, this little cog, and then within the Tools section, we want to go to Reconcile. Here's our reconciliation. Now note that the QuickBooks Online has a nice feature that we can link our accounts to the bank accounts. And that's a great feature. Just do want to point out that it could make the reconciliation faster and that it will help us to tick and tie things out. But we still have to tick and tie things out. So it could almost confuse things at first if you don't really understand what a bank reconciliation is. So really we're going to do this straight through without the linking process. And once you link, if you want to link the banks and your reconciliation, then just note that that's going to help you to basically tick and tie some things off a little bit quicker if you used the banking system in order to help record something in QuickBooks. So it'll help you kind of tie things out in that format. But You still need to understand the ticking and tying in order to finish the process and make sure you did the process completely, in order to understand what the bank reconciliation is doing, in order to be able to interpret the bank reconciliation. So what we have down here is we're going to have our input screen. Here's our account. We're going to have the checking account. That's what we're going to be reconciling. We reconciled last time and had a cleared balance or book balance of 109,415. That is our beginning balance for February. So here's our beginning balance, 109,415. That must match. If it doesn't match, we're going to have a problem. We're going to have to do some type of adjustment in order to get that to match. So that's going to be our beginning balance. Our ending balance then is going to be the 99,296.09. So I'm going to put that here, 99,296.09. That is what we're going to reconcile to. So here's our beginning balance. We're going to enter and check off all the activity, the cleared activity, and get to this ending balance. Those two need to be correct or we're going to have some problems. So make sure those are on the bank statement. So 022821, that's what we're going to reconcile as of. And once again, we're looking for these two numbers here and here, beginning balance, ending balance from the bank statement. Now this, of course, we're imagining this came from the bank here, and this is our beginning balance from the bank, plus additions, minus subtraction, gives us our ending balance as of February 28th. The detail of these two numbers, the addition and withdrawals, shown down here in terms of deposits for additions, and then checks and other activity withdrawals and bank charges for these subtractions here. So that's going to be the activity that we will have in our bank statement. Also note that if you have online checking, you really don't want to just have a running balance and just kind of try to reconcile to some random date. It's best to have the bank statement as of a month of time so that you can kind of draw the line and say this is as of this point in time, this is what it should be, this is what we had. And you'll have a very definite point in time in terms of the beginning balance and the ending balance. If you try to just print out a list of transactions, that line won't be as definite and it's going to be more difficult to reconcile. So get the actual bank reconciliations and that'll make your process easier. Okay, so let's go back over here. Now, we're not going to enter these. Again, these items would be helpful if you wanted to enter service charges. So we have a $20 service charge, for example. If I was to enter that here, it would automatically record that and check it off. But it can be a little confusing if we're out of balance to check that off. I would rather just manually input it and then manually check it off, so I know that if something's not reconciling, that what those differences are. So that'll be more apparent as we go. So that's what we're going to go with. We're going to say start the reconciliation, and then here is our information. Now this is a little summary up top. Notice what we don't have up here is the book balance, the balance that we saw on the balance sheet. What we do have is the cleared bank balance, meaning all the stuff that we checked off up until this time, meaning the beginning balance right here. That is the beginning balance for the bank, not necessarily the book, but it does match what we have checked off and cleared up until this time in the books, meaning we've checked everything off in the prior bank reconciliation to match this number. What we haven't checked off, even if there's transactions in January related to the cash account, is not included in that number, and we're going to have to include it in a later and in this time period. So this is going to be the beginning book balance. It matches what we checked off in terms of bank reconciliation, but does not match what's on our beginning balance in terms of our books, because we had some stuff that we didn't check off, some activity in the bank statement or in the checking account that had not yet cleared and supposedly will clear this time. So what we're going to do then is take that beginning balance. We're going to check off all the activity that happens here in this bank statement, and then that'll get us to this ending balance. So, and I'm not sorry, I got that a little bit backwards. I think this is the cleared balance so far, and that's our beginning balance. So they put that reversed here, and then here is the ending balance, and that's going to be our ending balance. So what we're going to do is we're going to take our cleared balance and get to the ending balance by checking off everything that's actually on the bank statement, all the activity, these items down here. If we check that off exactly, if we start here, this is our beginning cleared balance, our beginning balance, and we check off exactly this and then all the activity that makes up these two items, all this stuff, then we have to get to the ending balance. We will get to that number. It must work, and then we'll end up at our cleared balance here. This difference will then be down to 0. Once this difference is at 0, we are reconciled and everything is good to go. Down here we have our activity. This is in essence just the general ledger or the transaction detail for the bank account for the activity up till now. Note we have January and February in here, but typically we only have the uncleared items. So anything that cleared in January is not here. You notice there's no transactions for like January 1st or something because we checked those off. Those are part of the cleared balance. So you can think of that as if we already basically checked this off. That part of the calculation is done. I'm just going to highlight it and say we did that. Now we got to check these off, and we're going to do that by doing the activity down here. That's going to be what we do at this process. So we're going to go through this and check off this information. We got what hasn't cleared in January, which are these items, and the stuff that is all the activity in February that we are now going to check off. So once again, we're going to do the same process. We're going to go from the bank statement back to the books. That seems like a small difference. You can go either way, right? But it's easier to go from here to the books because we want to check everything that's on here should be on the books. Everything that's on the books will not necessarily be on here. So if you start going back and forth and not knowing which you're tying to what, if you're going both ways in the tying process, you can get a little mixed up. It's easier to just go one way, especially when you're starting. You're going from here to the books. All right, next process is we're going to have the, we can filter these. This is all transactions, including deposits and payments. We're going to do this one by one, just the deposits, just the payments first, and then all the deposits. So to do that, instead of having all, we're going to go to payments. And this is another one that will kind of focus your attention a little bit more. So if you're going, even if your bank statement isn't set up like this, to have deposits and checks set up separately and it's on the same line, you might want to still just go through and do the column that are the deposits and then the column that are checks, or vice versa. And that'll help you to not get mixed up on things. So that's what we're going to do here. So we're going to say the first check is cleared in February 5th, check number 1005 for 11,000. And we see that 11,000, it's 1006. Notice our check numbers are off because we had that problem in the past in that our check numbers were off by one check. And that won't happen if you print the checks because they should always have the same check number generally, unless one of the checks, the pre-printed numbers were off. We didn't do that. We hand wrote the checks and then entered them into the system. And we had this problem that the check numbers are off. If that's the case, that could possibly happen, and we still have to basically identify them. We have one less key to identify them with in that case. But this still is the amount here, so we're going to go ahead and move forward even though our check numbers are off. We're going to check that off here. Note that we wrote that in January, and it cleared in February. So I'm going to highlight this and click it. So we're going to record that it cleared in February to the bank statement. And this is one of the things that we'll see, of course, in the second month of operation that we won't see in the first month of operation typically, or may not. Well, we won't if we just started the bank statement on the first month. And that is that we had some stuff that's going to be not cleared in January that did clear in February, meaning we wrote the check in January, didn't clear the bank until February, and now we're checking off the item that cleared in February that was written in January. So then we're going to say the next item is 25, check number 1007 for 500. So here's the 500, check number 1007, also written in January. We are now clearing it in February. Next item, I'm always going to go back here and go from the statement back. So we've got check number 1009 for 360. Let's go back here. We got check number 1009 written in January. 360 is the amount. We'll check that off. Then we'll go back to our statement. We will highlight that. That has been completed. Check number 1011 for 3539. So check number 1011 3539. Again, we're all off by that one number. So we're just going to have to accept that. We're going to go okay. And note, we could go in there and change the account numbers to tie out here, but that could be a tedious process. It might not be worth the time. And you want to be careful to go back and change the past transactions. So we're going to check that off. Next, we've got check number 1012 for 630. So let's see if we can find 1012 for 630. Here it is, or 630. It's 1011 on our books. We're going to check it off anyways. We're going to go back here and we're going to say highlight that. Then we've got 1359 as the amount. So 1359. This one was the first one actually written in February and clearing in February. And then we're going to go back here. We're going to say that one has been found. We're looking now for 168, the amount 168. There we go. Checking that off. Going back here. Crossing that off our list. Bit of a tedious activity, but it's not too bad. Check number 1359. Going back here. Looking for 1359. There it is. They won't always be in order like this, but typically they'll have some ordering to them. And it could differ based on whether your bank statement has it in order by check number or by date. So we're going to check that off. Next one, 123.37. So we're looking for 123.37. There it is. We'll click that one off. Next one is 830. Here's the 830. Going back here, we'll check that one off. Next one, we're looking for 648. So we'll go back here, 648. We have to skip a few, that's okay, because we're going from the statement to here. So we'll check that one off and highlight that one. And then we have the 3512. So going back here, 3512, checking that one off. And there we have it. So there's no more checks here. We've got these two activities, a withdrawal and bank charges. If we go back to our statement here, we're not going to see withdrawals and bank charges. We didn't enter those. So that means that we have, I'm going back to the statement, we have these two items on the bank statement, not on our books. That means we're going to have to fix our books. We're going to have to make an adjustment. We're going to have to make a journal entry, a transaction, enter those into our books. That will almost always happen with the bank service charges because the bank just takes money out of our account and says you owe it to us and we're going to take it. And we don't know about that until we see the bank statement. The withdrawals, that could happen with withdrawals and some other kind of automated transactions. And we're just going to have to say, well, is it true? Did that really happen? Is that something that we're not going to get back? If it is, we're going to have to fix it on our bank statement, actually enter that. So I'm going to make these yellow, that we're going to have to enter those. Before we do, however, we're going to go to the deposit side. So we got these 3 deposits, see if those clear the bank. So I'm going to go back here. We're on payments now. We're going to go to deposits. Now you might be wondering, what about all this other stuff that's not checked? Again, we're going first from the statement to our books, not worrying about something that's on our books that's not on the statement. We'll talk about that in a second. So we're going to go, well, in more than a second, but a little while. We're going to go to deposits now. So we'll go to the deposit side again. We're going to go from the statement over here, these 3 deposits, to the book. Note we don't have the advantage of the check numbers over here, although they weren't much of an advantage anyway. And we just have the deposit amounts and the date. The date is more advantageous to us over here on the deposit side because it should only take like a day to 3 days to deposit, whereas a check could take much longer because we have to give the check to someone, they have to go to the bank, deposit it. That could take weeks and even months depending on who we give the check to. On the deposit side, if we're going to our bank making the deposit on that day, they should deposit it within a day to 3 days, get it in the system recorded. Now, also note that the deposits should be grouped in accordance with however we group them in the system, and that's where that undeposited fund comes into play. If we made 3 checks and deposited 3 checks from a client into the system, they typically show up on the bank as one deposit, and that's why we want to group them together. And if we've done so, the grouping will be good. If not, then we're going to have to go through and add up deposits on our books to see if they tie out to the deposits on the banks, and it gets a little bit messy. But there's less deposits, so it's usually not too bad. So we're going to go over here. We're looking for the 955.50. We see the 955.50, so I'm going to check that off. We're going to go back to the bank statement. We're going to highlight that and say we found that one, and go ahead and make that green. Then we're looking for the 12,250. back to our books. There's the 12,250. Back to the statement, found that one. Then we're going to go to the 825. There's the 825, found that one. Okay, so if we look here then, we found everything except for, of course, this draws and this bank service charge is 120. That means we should be out of balance by 120. So we're out of balance by 120. So note that what's not throwing us out of balance. What's not throwing us out of balance is like this deposit that's on our books that's not on the statement, because that's just not in the calculation. We started with the beginning balance on the books. We said we checked this off, and then we checked off all the activity. All we're doing is counting the activity to get to the ending bank balance, not to our book balance right now. We will get to the book balance on the bank reconciliation, but right now we're just tying out to the bank balance. So we're saying here's the beginning bank balance, here's the activity that we checked off, not all the activity that happened in February, giving us the ending bank balance off by 120 for those two transactions on the bank statement, not on our books. So now we're going to go through and enter those into our books. Before we do though, I'm trying to clear up what's going on with these two. If they're not included in that, what are they doing here? How are they a part of the process? These will be included in the bank reconciliation when we make the bank reconciliation. These will be the bank reconciling items. This is an item of a deposit that we deposited which has not yet cleared the bank. So that's going to be a reconciling item. That's going to be the difference between what we saw on the balance sheet in cash and what's on the bank statement in terms of the cleared amount, this amount up here. And if we're worried about that, and I would be a little bit worried because this was deposited on the 26th, and you would think it would have cleared, should clear in a couple days. And so if we're worried about it, we can call the bank and say, hey, did this clear in March? If they say it had, then it's not a big deal. It cleared, it just hadn't cleared by the cutoff date, and therefore it's a reconciling item. So the same would be due with the payments. If we go to the payments over here, payments, scrolling down, we've got a lot more payments that are outstanding, and they may be longer in terms of how outstanding they are. I mean, I've had outstanding checks for like a month or months in time, and they're actually good because people just apparently held on to the checks for a long period of time and then eventually deposited them. And so these items could be outstanding for a longer period of time, but the same is the case if we're concerned about it. Typically the bank reconciliation process happens sometime after the month closed, sometime in this case in March. And therefore we can call the bank and say, hey, did this check clear? That's 154, which is probably check number 1019 instead of 1018. And if it had, then it's not a problem, and it's just going to be part of our reconciling items. Okay, so now we're going to go ahead and we're going to record these two amounts. We're going to record these two amounts into our system and then check them off and reconcile them. I'm going to go back here. We're going to use the register to do this. So I'm just going to go to the accounting on the left, and then we're going to go to the chart of accounts up top, and then go to the checking or bank accounts, and we'll select the view the register. So we're going to go to the register here, and then I'm going to add something. I'm going to select this drop down. It's not going to be a check, although it's going to be kind of like a check. The expense item is a good one to use. The check will try to generate a check number, and there's no check number, so that's why we'll use this. I'm going to make it, I generally make these as of the end of the month that we're reconciling, which in this case is 02/28/21, February 28th, 2021. I'm not going to put a reference or a payee or a memo. Probably could be a good idea to do that. I'm not going to do it though. And then we're going to put 100. Basically, we have a payment of 100. Now, last time we put this miscellaneous payment, we're assumed that we took 100 out. This means we took 100 out, and we don't really know where it went because we took it out and we didn't put any detail in terms of what we paid for. So we don't know what expense account to put it in. We may have spent it on personal use, which I'm going to assume we did this time. So I'm going to assume we took it out of the business checking account and used it for personal use, and therefore should not be recording it to any expense, but should be recorded to a draw, which will not reduce the net income. So I'm going to look for an account called draws. I'm going to select the drop down. What I want is not an expense account, but an equity account called draws that won't affect the income statement. And QuickBooks names it, the chart of accounts that we used when we generated the system called it owner pays and personal expenses. So this looks like an expense item because it says expenses, but note it's an equity type of account. So that means it's not going to be on the income statement or the profit and loss. It's not going to be in the calculation of net income, the calculation of income minus expenses, as it shouldn't be, because it's not really an expense of the business, it's a personal expense. We're just taking the money out. And so that's going to be the difference there. So anytime we take money out or have a personal thing, we really want to take it and not put it on the income statement, but some type of equity account here. So we're going to use this equity account. And then we're going to say save on that. And that was for the $100. And then we have the next one, which is going to be the bank service charges of $20. So we'll go back here, same date. I'm not going to put any of that. We're just going to put the amount of $20. And this is going to go to an account, and this is going to be an expense. This is going to be the service charge, what the bank charged us for doing what they do. And so we got the bank charge and fees. And so I'm going to pick that one. This one is an expense type of account. We'll select that. Make sure to save it before moving on, or it may not record and we won't see it in the bank reconciliation. So those are going to be those two amounts. Now these should show up then and be checkable on the bank reconciliation. So I'm going to go back to here, and now we're on the chart of accounts. I'm on accounting, chart of accounts. We want to go to the reconcile. And then if we scroll down, we're on the checking account, and we want to resume reconciling. And then if we're on the payment tab, we should be on the payments. Now we should see these two items we just entered. We can check them off. So we're going to scroll down and see if we can find those two items. They should be all the way at the bottom because they're dated 2/28. So here we go. Here's the bank service charges and the expense for, or it's actually owner payment. That adds up to the 120. If we check those two off, we should be in balance. Checking those two off, balance goes down to 0. We look good. The statement ending balance is equivalent to or equals to the cleared balance. That's a good sign. So we can go back here and say, okay, we found a home for these now. These are done now, which is nice. And there we have that. So we found everything that's on the bank statement on the books, and therefore we have a cleared balance that matches what we checked off. Note again, this what we don't have, what we're not showing here, is the book balance that we saw on the bank, on the balance sheet when we first started. This represents everything in our system that we cleared, that we put a little check by. But we do have all this stuff that happened in February that doesn't have a check, and those will be the reconciling items. So this worksheet is basically saying all the stuff that's checked off, plus the beginning balance, which was all the stuff that was cleared before we started, has got to match the bank statement, because the bank statement represents the beginning balance, which is all the stuff we checked off before we started this reconciliation, plus all the stuff that we checked off during this reconciliation, means that we got to the ending balance. So in summary, we basically started with that. We checked all that off in January. That's our beginning balance. Then we checked off all the additions, or we checked off all the subtractions first. And then we checked off all the additions to get to this ending balance. And we found that. That's our cleared balance now. And what hasn't been checked off then will be the difference. These will be the items that are going to be uncleared. So we can now finish this and check that out on our report. So we're going to finish now. We're going to say yes and done. Oh, and then we're going to go to our reports. I didn't print the report. I should have printed the report. So let's go and see if we can find the report now. We're going to go to reports on the left side, and we're looking for the bank reconciliation. We're actually going to type in reconciliation. So we'll type in reconciliation, and then we'll have reconciliation reports. If we select that item, then we see the reports here, and it does give us the two reports, so that's nice that we can go into either one of those. We want to select the second one here, the view reports. Here's our reconciling report for February. If we go through this, we're going to say this is the statement balance, this is the checks and payments that cleared, the stuff we checked off, the deposits and others that cleared, and then here's the statement ending balance. So this is all, typical stuff that is on the bank statement. So that's right here. So it's not really the heart of what we want. What we want is this uncleared amount, because this represents the amount that has not yet been cleared. That's the difference between the statement balance and our book balance. This is the register balance that we first saw when we first started on the balance sheet. So this is actually the balance sheet amount, and the difference between those two are the reconciling item. If we know exactly what this reconciliation items are, then we could feel confident about everything that's in the system at this time. So we might want to know more detail about that 300. If we scroll down, we're not really looking at the checks that have cleared. That's up here again. That's all on the bank statement. So that's good information, but not the real stuff that we really want to have here to help us out. That's added to what we have on the bank statement. Then we have the deposit and cleared deposits. Again, that's on the bank statement. Here's what we really want. Here's the uncleared checks. So this is the stuff that was written in February that didn't clear. These are the reconciling items. And here are the checks, and here are the reconciling deposits. So if we subtract those two out, it's 1941.8 minus the 1641.27, or that $300.53. And that, of course, is equivalent, scrolling back up, to that 353. So note that if we're not in balance and something's wrong, and even if it's a small amount, like this one's 300, you might say if there's a big company, that's nothing. I don't care if I'm out of balance by 300. To be honest, a big company, if 300 was just a rounding error, it's not there. It's not a big, but it can be a problem because that 300 could be not just $300 off. What it really consists of in this case is all these items. It consists of 1, 2, 3, 4, 5 checks that add up to 1,941 and this deposit of 1,641. So the fact that we're out of balance by just a little bit doesn't mean, it's just a little bit, so that's okay, we'll just force it to reconcile, because that little bit really is it could be multiple things going different ways, deposits and checks. So when we reconcile, you really want to make it as exact as possible. You want to make sure that we reconcile down to the penny if possible, because that's what really gives us assurance. If we have to make an adjustment to force the reconciliation, the value of the reconciliation has gone way down. If we can reconcile exactly, then the value of the reconciliation is quite high, and we can basically say that the bank has basically double checked everything that we've been inputting into our system. And these we haven't yet double checked, but we could just go online or call the bank and just see if they did clear in February, or March I should say. And if they have, then we found those two and everything is looking good. So now we're going to print this one out. We don't have the export option, so we're going to use the printing option. And I'm going to print it to a PDF file. So if you have a PDF printer, that's the one I would use here. I'd change the printer and go to the PDF printer. I highly recommend having one available. If there's a Qt PDF printer, you can look up Qt PDF printer, and you'll find one that you should be able to download for free. I'm not promoting it or anything, but that's one that I have here. And so anytime that a system, any computer system, says you can print something but you can't save it, there's no option to save it as a PDF. If you have a PDF printer, then you can. So we're going to go ahead and print that then. And sometimes it takes a little while to pop up. Here it is. It's going to the right location. That's where we want it. So I'm going to call it bank reconciliation, and just change date to 02/28. So bank reconciliation 02/28/21, and save. Hello. In this presentation, we will create a bank reconciliation within QuickBooks Pro 2018. This will be the second bank reconciliation of a company that has been newly created. So in a prior presentation, we created the first bank reconciliation of the company, it having its own problems when it's the first bank reconciliation. It's good to see two bank reconciliations, the first and the second, demonstrated, because then we can see how they tie together, how the outstanding items of one will be cleared in the second bank reconciliations, and what the outstanding items will then be in the second bank reconciliation. It's also useful to note that the second bank reconciliation should be easier, in that we don't have some of those problems we had in the prior bank reconciliation in the first bank reconciliation that we create when starting a new company. If you've been following along with us, we will be continuing with the Get Great Guitars problem. If not, that is okay as well. We will be performing a bank reconciliation, so you can follow along with that process. The second bank reconciliation of 2, so we can see what the outstanding items are and see how those have cleared from the prior month this time. We currently, if you have the backup file and want to restore this data to this point in time and work through this, then we can go to the File tab, we can go to Restore and restore that process. If you don't, that's okay too. Note that we have the Open Windows tab open. That's going to be in the Views and Open Windows list. We'd like to have that open. And the other item we have open, or the only open item, is the Home tab. That's located in the Company dropdown and then in the Home tab. This is where we are currently at. What we are going to do now is enter a bank reconciliation. To discuss that, let's first look at the balance sheet and the cash account on the balance sheet. We're going to go to Reports up top. We're going to go to Company and Financial and scroll down to the balance sheet. We are going to create the bank reconciliation for the month ended 02 February 28th, 2021. February 28th, 21. We're going to be working this problem in the future. So that's the date of the bank reconciliation. You can see the bank balance here, $99,115.56. Now, if we thought we did everything perfectly in implementing the data, you would think that the bank reconciliation would have that same number. But as we discussed in the prior presentation, the number will differ because of outstanding checks and outstanding deposits, even if we did a perfect job. I won't go into the whole goals of the bank reconciliation again, but note they're very important. They're our second best internal control. They are number 2 in only to the double entry accounting system, which we are using through using the software. And whether we are a big company or a small company, we should reconcile the bank accounts as one of the internal controls that we are doing. So we have this amount. What we're going to do is compare that to the bank statement as of the end of the month. So let's take a look at the bank statement. Here is the bank statement. So we have the bank statement as of February 28th, and we see the summary up top, beginning balance. That's going to be the same ending balance of the last month, of course. And then we've got the additions, we've got the subtractions, and we have our ending balance. This ending balance, 99,296.09, slightly different than what we had on our bank statement. And that difference is what we're looking to reconcile. If we do reconcile that, then we can have some assurance, a pretty good assurance, that we've entered all this data correctly within the system, which is a good check. So note, within the bank statement, we're going to have deposits by date and amount. The dates will be different in our system depending on when we entered the dates, because it's going to take a little bit of time for the bank to process those, although they should be pretty close. And then the checks are going to have the date, the check number, and the amount. Now the dates on the checks could be quite a bit off because it takes some time for the checks to get to the other person and for them to deposit it in the bank and for their bank to talk to our bank. So the dates are not as relevant here as the check number and the amount for us really to verify these amounts from the checks. We then have the withdrawals and the bank service charges at the bottom. These are going to be other types of things other than checks reducing our bank balance. Other types of things oftentimes which we do not have on our side of the books. Now we'll go back to QuickBooks and we'll look at our side of the books. Back into QuickBooks, we're going to scroll up and we're going to go to the Banking tab and we're going to go to Reconcile for the bank reconciliation. And we got the information we're going to set here. We're going to have the checking account. It should automatically pop up for February 28th if we had entered the bank reconciliation for the prior month, which we had in the prior presentation. We have the beginning balance, the 109,415. That will be the beginning balance on the bank statement, which will also equal, of course, the ending balance of the prior bank statement. In other words, the ending balance in the bank statement, in our case, for January, and the beginning balance in the bank statement for February. We're then going to enter the ending balance here. This is the ending balance that has been entered. We put this in place for the end of February on the bank statements. We have some additional items down here, including the service charge and the earned interest. We could put these in place if they were on the bank statement and not on our books. However, I recommend not putting them in this way because it can confuse us when we're checking everything off, and just looking for those differences and then putting them in manually into the check register, because that'll be something that's very visible for us to do. So I'm going to say continue here. We're going to continue on. Here we have our information. On the left side, we have the date, we have the check, and we have the amount. That's going to be similar to what we have on our bank statement. However, the date will differ here because the date in our books is going to be when we wrote the check, which will be before it cleared the bank statement, which will be the amount on the bank statement or the date on the bank statement. The checks will tie out and the amounts will tie out. On the deposit side, we've got the date, which once again will be slightly different, but it should be much closer on the deposit side because when we make a deposit, it should only take around 3 days for that to clear, so it should be pretty close. And we have the amounts. We then down here have our reconciliation item. This is very useful because it will show us when we have completed the bank reconciliation successfully. Meaning when this difference here is at 0, we have completed the bank reconciliation successfully, and we can go ahead and select reconcile for it to complete the process. This cleared balance is 109,415. That's the amount that has been cleared before we check anything off, and it will equal to the prior bank balance, or the prior cleared balance, the prior bank statement balance, we should say, that we had cleared at the time of the last bank reconciliation. As we check off items here, we're going to contribute to this cleared balance, and once we're done with this process, the cleared balance should equal the ending balance, meaning everything that we have checked off through the process should tie out exactly to what we've seen in the bank statement, and that's why we checked it off, and therefore it should match the ending bank balance, and that is when this amount will be to 0. Anything that is not checked off that is still within the month of February, those will be our outstanding items. So that's how we're going to work through this. We're going to put our items in terms of our bank statement over here and our rec side by side and go through these and just check these off. That's how we work these problems. Note that what we're going to say is if it's on the bank statement and it's not on our books, it's probably the case that we need to adjust our books, meaning the bank statement's probably right and we need to fix our books. And that would be for the example of these items down here. We have a withdrawal of 100 and service charges. Those are examples of items that the bank may have that we have not yet recorded, and if that is the case, we'll have to record them. If, on the other hand, it's an item on our books that's not on the bank statement, the hope is that it's just an outstanding check in that case. In other words, it's a check that was written towards the end of the month, most likely, and therefore it hasn't yet cleared the bank because it hasn't had time to do so. And it will just be an outstanding item on the bank reconciliation. So what we're going to do then is we're going to go through this items and just check everything off from the bank statement and the bank reconciliation. So first we'll start with the checks up here. So we're at the checks. Here is the bank statement. Here's the bank reconciliation. We see the 11,000 here, check number 1006, date 25. Same amount, same check number, date different. Note the date is in January, meaning we wrote it in January. So you think it would have cleared, or we would have had to deal with this in January when we did the bank reconciliation. However, this item is one of those items that were outstanding, meaning it was part of those outstanding items, the difference between the bank balance and the book balance in our reconciliation for January, now clearing in February. So we're going to go ahead and check this off. We're going to say that cleared in February, and we'll highlight it on this side, saying it has indeed cleared. And then we have the 500 at the 1007. Again, February on the bank statement, but January on the bank reconciliation. Number the same, amount the same. We'll check that off, and we'll highlight this amount. Then we have 360. Again, February bank statement. January on our books. We're going to check that off on the bank reconciliation and highlight this as being cleared. We have the 3539 and the amount or check number 1011, 1011, checking that off, crossing that off or highlighting it. 630, 1012, 630, 1012, checking that off, highlighting this amount. And then we have the 1359, 1013, 1359, 1013, just checking and ticking, tying these off as we go. And of course, now we're past the point of the outstanding items from the last month into the current month items. Then we have the 168 and 1015, 1015, 168, checking that off, highlighting this. We then have the 1359, 1014, 1359, 1014, checking that off, highlighting this. 123.37, 1016, 123.37, 1016, checking off, highlighting this. 830 and 1017, 830, 1017, checking off, highlighting. 648, 1020s, and 648, 1020s down here. So we had to skip a couple. That's okay. We're going to check that off. And then we're going to say 3512, 1023, 3512, 1023. Again, we had to skip a couple. So that's all we have in terms of checks on the bank statement to write off. Even though we have a couple more that are on the bank reconciliation, those then are outstanding. The ones we now checked off are the ones that will be cleared. And everything that has a check then, if we add everything that has a check, it'll add up to the cleared balance on the bank statement. And that's how we're going to reconcile these items. Next, we'll work with the deposits. There should be fewer of them, so we've only got a couple deposits to be dealing with here, and there's going to be 3 on the bank statement. Here they are. Let me see if I can pull this over just a bit so we can see the date. So we have our 955.5 on 2/3. Of course, here it is, but this one was cleared or written or deposited in January, not clearing until February. And then we have the 12/250 on 9/29. There's the 12/250 on 2/6. Dates slightly different, however, it's the same transaction. 8/25/215, 8/25/212. There is that item. And so that is everything. If we look on the bank statement, we have now checked everything off. Everything in green has been checked off except for these 2 amounts down here, the withdrawal and the service charge, that adding up to 120. Looking at the bank reconciliation, we see that 120 difference down here. So that's the difference we need to account for now. Now, the difference is due to something on the bank statement, not on our books, and therefore something we need to fix. So the easiest way to do that is just to go into the check register and enter any balance that we need to enter. The tricky thing is, of course, that we know that cash needs to go down, or it may not be that obvious, but we know that cash needs to go down, but we don't always know the other side of it. What's the other side of the transaction? We're going to have to record that to something, as we will see. So let's go back and see those 2 items that are outstanding and then record those in the check register. The 2 items are withdrawal of $100 and bank service charges. A withdrawal, we're going to say that we went to the ATM basically and drew some money out, or we drew money out of the bank, and we were saying that that could go to a couple different places. We're going to have to ask that as the question. Is it a draw that we spent and drew out for personal use, or is it a draw that we took out for business use? Then we have the bank service charges, which are often just charged to us by the bank taking money out for various charges, and we don't know about it until we get the bank statement, at which time we'll have to enter that into our books. If we go back over to the to QuickBooks, we're going to go to the check register. So I'm going to open the check register, go into banking, use register, and we're going to enter this data as of the end of the month, 02/28/21. I'm going to make sure you don't have a check number because this isn't a check. And I'm going to put the withdrawal in first. I'm not going to put a payee. I don't know who the payee is because we drew money out. It's going to be $100. And we're going to say this time, last time we put it and assumed it was a business expense, putting it into miscellaneous expense. This time I'm going to assume it's a draw for personal use. I'm going to assume we went to the ATM, pulled money out for personal use. It's not business related and therefore should not be on the income statement. And to do that, we don't want it on an income statement or an income or expense account. Where we want it is in the equity account somewhere. So if we set up the accounts through QuickBooks, they'll typically have an equity account of some type, depending on if we're a sole proprietor, a corporation, or a partnership. We will have different equity accounts. So here we have the owner's equity as a sole proprietor, and we could put it directly there, or they also made a draws account. So the draws account will track draws throughout the month for us as well, tell us how much money we took out, but not affect the income statement. So if you have the draws account, that's the one to select if we're pulling out money for personal use. It should not be on the income statement, and we can have that there. Note that it's not going to record anything until we select enter. So I'm going to select enter. There we have that. If we go back to the bank reconciliation in the open items window, we can then see that 100 right there. Checking that off brings us down to being only out of balance by $20. That the service charges of the bank that charged us service charges. So I'm going to go back to the checking account. We'll enter the service charges now. Once again, I'm going to say other. I'm not going to put the payee. I'm just going to put the $20. And now we need another account again to record it to. If you set up within QuickBooks, they usually do set up a bank service charge account. So it will be in the expenses. There'll be a bank service charge. Typically, if you start typing in bank service charge, there it is. If it's not there, then you could think about creating one. If it's insignificant to you, you might want to just put it into some other account like miscellaneous. I like tracking the bank service charges even if they're small, so I will put an account called bank service charges and enter. Then we go back to the bank reconciliation. There are the bank service charges, and checking that off, there we have it, and we're back in balance down here. So we're back in balance. If we want to see what happens, let's take a look at what happens on our balance sheet and our income statement for those items. If we go to the balance sheet, we have changed the checking account now. So our checking account balance is now $98,995. If we double click on that, we have our two items here that we just entered into the register to change that balance. So when we are reconciling, we are now reconciling to this $98,995. The only difference being the outstanding check items. If we close this, we're going to go now to the profit and loss by going to reports. Scrolling down, company and financial, profit and loss, date range. I'm going to make it the whole year, 01/01/21 to 12/31/21. And I'm going to scroll down to the expenses. Note last time when we made a draw, we put that $80 into an $80 miscellaneous expense. This time we did not put it into the miscellaneous expense, we put it into draws. That $80 reduced net income, and if we took it into draws, then it's assumed to be personal use, going back to the balance sheet. Rather than being in miscellaneous expense, it should then be in the equity section under draws. So here's the $100 we took out there. This will accumulate until the end of the year, and then it'll close out to the equity section. So that's a good distinction to have when you're doing these bank reconciliations, or when you're working anywhere and you have this money in terms of where do you put it. Is it a personal or business expense? If it's personal, you want to put it into the draws. Okay, back to the bank reconciliation. Bank reconciliation here. We are now in balance. We have these items that will be outstanding. These are going to be the outstanding items. These unchecked items, those are the differences between the bank balance and the book balance. Both outstanding checks, and we have one outstanding deposit. If we have questions about those checks and deposits, we can call the bank and say, hey, it's March now. Has this deposit in particular cleared? That's the one I'm most concerned about. Has that cleared in March? And if it has, then great. Then I'm just going to keep it as undeposited and still be happy that it has cleared and we have then reconciled. If you have not reconciled here, if that is not 0 and you select reconcile, you could force the reconciliation. QuickBooks will make it reconcile, but it'll force QuickBooks to do a journal entry and it really deteriorates the value of the bank reconciliation. Even if this is off by a little bit, if it could be off by multiple things. I mean, meaning if this was off by $20, it might not just be one $20 item that was missed. It might be 10 items that add up to 20, them being both deposits and checks. So we might be missing a lot of information, therefore, if we're even off by a little bit. If we're on exactly, however, we're pretty good assurance. We have pretty good assurance that everything on that bank statement has indeed been put into the books properly, and that's a really good check for us, not only for the checking account, not only for cash, but for all the areas within the accounting, cash being something that really is a part of every accounting cycle and every process within the accounting department. So we're going to go ahead and reconcile this now. So we're going to reconcile. It's going to give us the option to print. We really do want to print this as it gives us the option because we cannot always go back and print prior bank reconciliations. And bank reconciliations could change in that people could go in there and delete checks within QuickBooks, and that would mess everything up. And it would be very good for us to have the bank reconciliation that we can go back and say, what happened to this check that was here before and it got deleted? The only way to do that is to have the detailed format here. However, it's nice to have both so that we can present the summary to those who need the summary in a way that doesn't overwhelm them, and have the detail for the detail that we should have. So let's go ahead and display those, and then we'll export those. Here's the summary report. So the summary report starts with the beginning balance. That's what the balance was before. And then we've got the cleared transactions. It's going to be the checks and the deposits, and that will give us the total cleared transactions. And if we add those up, then we're going to get the cleared balance, the 99,296.09. That matching the cleared balance or the ending balance on the bank statement. So in essence, this is the bank statement balance, this 99,296.09. This is really where the reconciliation kind of starts. That's where the bank balance is. Then we have the difference between the bank and the book, and that's going to be the outstanding checks. There's 5 of them. We don't know which 5 here, which is why we want the detail, but we know that there's 5 checks and they add up to $1,941.80, and we know that there's 1 deposit that is outstanding, adding up to $1,641.27, meaning there's only a difference of $300.53. That emphasizing our point here that the fact that we're only off by $300 may make us feel that we're pretty close, when in actuality we're off by 5 checks and a deposit. So the fact that we may be off by not too much doesn't mean that we have entered everything accurately. The closer we are, in other words, to being in balance doesn't necessarily mean that the closer we are in doing a good job in entering all the data, because it could be a combination of deposits and checks that are making it pretty close, and we want to have all those input to have the detail. In any case, if we add this up, then that's the difference to get our book balance of $98,995.56. If we look at our balance sheet, back to the open windows, balance sheet scrolling up, $98,995.56 is our balance here. So that's what we want to have. I'm going to go back to the reconciliation summary. Now we're going to go and note there's no new transactions, because there is no new transactions here. If we had any data past this point, then it would give the new transactions at the bottom. We don't have any new transactions at this point because this is as far as we've gone in terms of entering data through February. So this is the end of the bank reconciliation for us. We're going to export this to Excel. We already have an Excel report that we generated. We are going to export this to that same workbook in a new worksheet. So in order to do that, we're going to go to Excel, create new worksheet. So it's going to be a new worksheet within an existing workbook. Let's hit the browse button. It should be going where we want, but it looks, just make sure section 8 looks good. Going to double click on that and export. QuickBooks will then export that to our existing Excel file, open that file, and create a new tab. Put on that new tab the data that it has then exported from this report, as we see here. I'm just going to update that a bit now. My typical updates are our typical updates. I'm making it a little bit larger by increasing this item. And I usually go to the View tab up top. Go to the Windows, unsplit this split thing down here, unsplit that, and then go to the Layout tab, so Page Layout, this little icon, and see that the header is there, just to check the header is present. Go back to the normal view, and then just save this. Okay, close that. Now we're going to go to the balance detail, and we'll export this after looking at it very quickly. The balance detail, remember, this is the one you really want to have because it's going to actually list out the checks that we want to actually see, which are the difference if we had a problem. So we've got the beginning balance. These are the cleared balances. These are important but not as important. These are the items we can find on the bank statement fairly readily. The ones we cannot find on the bank statement because they have been uncleared are the difference. So here is the cleared balance, the 99,296.09. That being the bank statement balance. These are the 5 checks now listed out. This is the detail we would like to have so that we can see those outstanding checks, and we can, if we want to verify them, call the bank and ask if these cleared in March. And then we have the outstanding deposit. Once again, this is probably the one we're most concerned with because we deposited it on the 26th. And we would think it would clear possibly by the 28th, so we might want to call about that and make sure it has. If it has, great. Just a timing difference. We'll keep it here and note that we're off by that amount and that it has cleared in March. And then we have our ending balance, 98,995.56. That then, once again, if we go to the balance sheet, matching the 98,995.56. Back to the detail. We're going to go ahead and export this as we did with the summary. Go into Excel, create new worksheet, and we're going to put this in an existing workbook. It should already be going to where we want it to go. We're going to double click on section 9 and export. It will then create a new tab and export to that tab, and then we're just going to pull that over. See, it's taking a little bit longer because it is a longer report here. But now we have this. We're going to pull that here. And we see the more detail within the Excel. I'm going to pull this to the right. So we're going to pull this over to the right. I'm going to rename it by double clicking on it. I'm going to say Bank Rec February Detail, something like that. And then we'll go to the top. We're going to go to the View, Windows, unsplit the panes. And we might want to then adjust the settings for printing in case we wanted to print this by going to the File tab, going to Print, and then adjusting from the view from Portrait to Landscape and see if that does what we want. Now it's 2 pages, but I can see all the balance on all the columns on 1 page. So that should be enough for us. If we still can't see the columns on 1 page, we can go through and delete and adjust the column size. And if that still doesn't do it, we can fit all columns to 1 page using this format here. I wouldn't do this unless it's a last resort, because it does adjust the columns, and it can do so in kind of a funny way. But that is the last resort effort to do that. And we're going to go ahead and save this and close that. And that's going to be it.